Well, HDFC Limited came out with its Q2 FY22 earnings, and both the numbers as well as the management commentary looked strong and pretty much in line with expectations, but quite strong. The reported net interest income has come in at around 4,100 odd crores, which is a jump of 13% when you look at the numbers on a year-on-year basis. Profit after tax has come in at 3,780 crores, which is a far more healthier jump of 32% year-on-year. Mind you, in Q2 of FY21, that number was at 2,870 crores. So meaningful jump there. And in terms of impairment, if I can look at it on a quarter-on-quarter basis, Q2 of FY21, the impairment amount stood at 436 crore rupees. That moved up to 686 crore rupees in Q1 of FY22. Mind you, there was a significant jump there, and that has come back down to pretty much the same level, around 452 crore of impairment in the current quarter. When you look at NIMs have jumped from 3.2% to 3.6%, a clear meaningful rise there, and capital adequacy ratio is standing currently at 22.4%. When you look at, let's talk a little bit about the AUM. The AUM currently stands at 5.9 lakh crore versus 5.4 lakh crore in Q2 at the end of Q2 of FY21. That's a jump of almost 10% plus. Individual loans comprise 78% of the AUM, and growth in the individual loan book was around 16% when you look at it over the course of the last year. Let's talk a bit about asset quality. Asset quality has improved. The management has been reiterating that even on the call. Collection efficiency in individual loans stands now at 98% at the end of Q2. Gross non-performing loans stood at 10,341 crore for the quarter, which is equivalent to around 2% of the loan portfolio. In terms of lending operations, individual approvals grew 67%. Disbursements grew 80%, and 30% of the home loans were contributed by the lower income group. When you look at management commentary, they say that demand for home loans continues to remain strong. A growth in home loans was seen in both the affordable housing segment as well as high-end properties, which is quite bullish, and which is also quite good for the economy. When you look at individual disbursements in the months of for the month of October 2021, that was the highest ever in a non-quarter end month. When you look at 89% of the new loan applications were received through digital channels. Average size of individual loans has increased to around 31.9 lakh rupees, and the loans restructured constituted 1.4% of the loan book. Non-individuals has seen an 18 bips reduction in NPAs in Q2, and the non-individual loan book has seen a healthy growth in Q2, and they are expecting an even healthier pipeline of growth in the months to come. So good commentary overall, good numbers, pretty much in line with what we were expecting HDFC Limited.